What if I told you that your first $100,000 is actually the hardest money you'll ever make? Not your second $100,000. Not your first million. The first $100,000. In fact, legendary investor Charlie Munger once said that getting to your first $100,000 is a real challenge because that's the point where you finally have enough capital working for you. Most people think building wealth is about getting rich overnight. They think they need a lucky stock pick, a winning lottery ticket, a six-figure salary, or some secret investment strategy that only wealthy people know. But that's not how wealth is built. The truth is much simpler. The first $100,000 comes from a combination of discipline, smart decisions, and consistency. And once you reach that milestone, something incredible happens. Your money starts helping you make more money. The process becomes easier. The momentum becomes stronger. And every future dollar comes faster than the previous one. Today, I'm going to show you exactly how ordinary people can build their first $100,000 faster than most people ever do. We'll cover the biggest mistakes that keep people stuck, the exact wealth-building framework, the power of investing, income growth strategies, and a step-by-step roadmap you can start following today. By the end of this video, you'll know exactly what it takes to reach six figures and why this milestone can completely change your financial future. If you're new here, make sure to subscribe and turn on the notification bell, okay? Now, let's get started. Chapter 1. Why the first $100,000 matters so much. Most people underestimate how powerful $100,000 really is. They see millionaires on social media and think six figures isn't impressive anymore. But that's a huge mistake, because $100,000 is not important because of the number itself. It's important because of what it represents. It represents financial discipline. It represents delayed gratification. It represents years of good decisions. And most importantly, it represents momentum. Imagine two people. Person A spends everything they earn. Person B builds a $100,000 investment portfolio. If both portfolios grow at 10% annually, Person B earns $10,000 per year without doing anything. That's nearly $833 every month. While they sleep, while they work, while they watch TV, the money is working. And that's the point where wealth building starts accelerating. The hardest part isn't making money. The hardest part is creating enough invested capital for compounding to matter. That's why your first $100,000 is such a powerful milestone. Chapter 2. The biggest reason people never reach $100,000. Most people focus on earning. Very few focus on keeping. You don't build wealth from income alone. You build wealth from the gap between what you earn and what you spend. Let's say someone earns $120,000 a year, but spends $118,000. They're wealthy on paper, but they're not building assets. Now imagine someone earning $60,000 and investing $15,000 annually. Who's building wealth faster? The second person, because wealth is determined by what you keep, not what you earn. Many people fall into what economists call lifestyle inflation. Every raise becomes a new expense. Every promotion becomes a bigger car. Every bonus becomes a luxury vacation. As income rises, spending rises, and wealth never appears. This is why many high-income earners are secretly broke. They're earning more than ever, but saving almost nothing. The first step toward $100,000 is controlling lifestyle inflation. Chapter 3. The power of saving your first $10,000 before $100,000 comes $10,000. And your first $10,000 changes everything. It proves you can save. It proves you can delay gratification. It proves you're capable of building wealth. Many people skip this step because they're obsessed with investing. But investing without savings is like building a house without a foundation. Your first goal should be emergency fund, no high-interest debt, consistent saving habit. Once you've built those foundations, investing becomes much easier because now you're not constantly pulling money out during emergencies. You're letting it grow. Chapter 4. Increase your income aggressively. Here's a truth many financial gurus ignore. You can only cut expenses so much, but your income can grow dramatically. Think about it. You can save $200 by cutting expenses, but you can increase income by thousands. That's why income growth is critical. Ask yourself, can I learn a valuable skill? Can I negotiate my salary? Can I start a side business? Can I freelance? Can I create content? Can I offer services online? The fastest path to $100,000 usually involves increasing income while maintaining reasonable expenses. Many people focus only on saving money. Wealthy people focus on earning more. The combination is powerful. Chapter 5. Why investing is non-negotiable. Saving alone won't get you rich. Inflation makes sure of that. You must invest. Historically, broad stock market index funds have generated strong long-term returns over decades. The key word is long-term. Not days, not weeks, not months, years. Most people fail because they're looking for shortcuts. They chase hot stocks, crypto hype, get-rich-quick schemes, instead of letting compounding work. The real secret is boring. Invest consistently. Stay invested. Ignore noise. Repeat. Year after year. That's how wealth is built. Chapter 6. The magic of compounding. Compounding is often called the eighth wonder of the world. And for good reason. Imagine investing $500 per month. Not a fortune, just $500. At a long-term average annual return of 10%. After 10 years, you've contributed $60,000. But your account could be worth significantly more because investment gains generate their own gains over time. This is the power of compounding. Money earns returns. Then those returns earn returns. Then those returns earn more returns. The longer you stay invested, the stronger the effect becomes. Chapter 7. The 5 levels of wealth building. Level 1. Survival, living paycheck to paycheck. Level 2. Stability, emergency fund established. Debt under control. Level 3. Growth, regular investing. Assets growing. Level 4. Momentum, portfolio approaches $100,000. Compounding becomes noticeable. Level 5. Acceleration, money starts generating meaningful income. Most people never move beyond level 2 because they never develop consistent investing habits. Your goal is to reach level 4 as quickly as possible. Chapter 8. A simple roadmap to your first $100,000. Step 1. Pay off high-interest debt. Step 2. Build a 3 to 6 month emergency fund. Step 3. Invest automatically every month. Step 4. Increase income every year. Step 5. Avoid lifestyle inflation. Step 6. Stay invested during market crashes. Step 7. Repeat for years. Notice something? None of these steps are complicated. The challenge isn't knowledge. The challenge is consistency. Chapter 9. Mistakes that destroy wealth. Mistake number 1. Waiting for the perfect time. The perfect time never comes. Mistake number 2. Trying to get rich quickly. Fast money often disappears quickly. Mistake number 3. Constantly buying and selling investments. Mistake number 4. Ignoring retirement accounts and tax advantages. Mistake number 5. Lifestyle inflation. Mistake number 6. Not investing at all. Every year you delay investing costs future wealth. Time is your most valuable asset. Chapter 10. How long does it take to reach $100,000? The answer depends on 3 variables. Income, savings rate, investment returns. Someone investing $1,000 per month consistently could reach 6 figures much faster than someone investing only $200. The important thing isn't comparing timelines. The important thing is starting. Because the person who starts today has a massive advantage over the person who waits 5 years. Time matters more than perfection. Action beats planning. Consistency beats intensity. Chapter 11. The mindset of people who reach $100,000. They think long-term. They don't panic during downturns. They don't chase trends. They focus on assets instead of appearances. They understand that wealth is what you don't see. The expensive car isn't wealth. The designer watch isn't wealth. The growing investment portfolio is wealth. The income-producing asset is wealth. The business is wealth. The investments are wealth. True wealth is invisible. Chapter 12. What happens after $100,000? This is where things become exciting. A 10% gain on $10,000 equals $1,000. A 10% gain on $100,000 equals $10,000. A 10% gain on $500,000 equals $50,000. Notice what's happening. The same percentage produces dramatically different results because your capital base is larger. That's why many investors say the first $100,000 is the hardest. Once you have enough capital invested, the journey becomes much easier. The snowball starts rolling downhill, and momentum takes over. Building your first $100,000 isn't about luck. It's not about having rich parents. It's not about finding the next hot stock. It's about mastering a few simple principles. Spend less than you earn. Increase your income. Invest consistently. Stay patient. Avoid lifestyle inflation. Trust compounding. And keep going when progress feels slow. Because one day you'll look back and realize something incredible. The money wasn't the biggest reward. The habits were. The discipline was. The confidence was. The knowledge that you can build wealth was. And once you reach your first $100,000, you'll discover something most people never learn. The first 6 figures are the hardest, but they're also the foundation for everything that comes next. Start today, stay consistent, and let time do the heavy lifting. That's all. Thanks for watching.